Thanks to everybody who's joining us today. We're going to give a few more minutes to those who are still trying to log in. Well, welcome everybody. I want to give a warm welcome to all of you who are joining this event for the first time. Localvest is a marketplace where investors and veteran entrepreneurs connect to build America's fastest growing companies. And we're on a mission to build the largest community of veterans investing and supporting veteran entrepreneurs and causes. We make connections by hosting events just like this one, and we share the opportunities with thousands of others in our growing network. And we're also here to help on marketing of digital platforms, expanding the reach to even more investors. In the background, our tools help you track and engage with potential investors efficiently. So here are my calls to action for you. If you are an investor, sign up for the platform. It's free. You'll see even more active deals and be the first to hear about the new ones as they come in. And we continue expanding opportunities for accredited and non-accredited investors alike. For those who may be raising equity capital, reach out to us to discuss how we can help you with more leads from people who understand you. And that includes those funds or real estate syndicators who want to make their first move into ads on social media. We have a system that can generate leads, nurture them, and deliver them as scheduled calls right into your calendar. Reach out and I can explain how. And if you just want to help our mission to connect investors and veteran-led companies, reach out and we can see how we can work together. Today, we have two companies who will give a quick pitch. You won't have questions from me or any follow-ups, just the pitch from them. We are a marketplace for veteran-led investments, so we're not vetting the deals and you don't invest through us. Everything is a direct conversation with the companies and funds, and you invest where you want to invest. If you have a question, you can ask it in the Q&A chat that you see down at the bottom. If we don't answer your question during the session, don't worry, we'll pass it on to the companies and they'll be able to answer offline. And we'll also be dropping some helpful information to you along the way in the chat. And everyone who signed up will get a recording on links for connecting with the companies, so you don't have to worry about trying to take notes and going from there. And you'll have links to the deal tiles where you can learn some more information. So with that, let's get things started. First, I'm going to introduce Joe Frazier. He's a Navy veteran and he's a co-founding partner of the True Life Companies. And with him today is Morgan Tassler. She's the Director of Partner Success. So I thank you for joining us, and I will turn it over to you, Joe and Morgan.
Good morning. Thanks very much. Morgan, you want to lead us off? Can't hear you.
Thank you, Joe. As I said, I'm the Director of Partner Success, so thanks for the introduction. We are here to talk to you about the True Life Companies and the opportunities that our funds and other offerings might have for you. So Joe, go ahead and kick it off.
Great. Thank you very much, Morgan. So as a residential real estate developer now for 23 years, we've really created something we think is very unique to the industry. A fund that allows investors to invest in residential real estate development projects through a diversified portfolio. And so we're not having people invest in one single asset at a time, but actually into multiple projects that are ongoing. Go to the next slide. As we saw the disclaimer up there earlier from Localvest, that was ours. So the millennial population is really who we serve from the standpoint of bringing the first-time home buyer experience to as many millennials as possible. I've got 3 of them, 3 kids, 38, 34, and 33 or 32. You know, 2 out of the 3 have had the experience so far to buy their first house. My son's working on his, and what a great experience to see them go through that process. So that's really what the True Life Companies, what we really are focused on is, in this case, 65 million or so millennials going into their home buying years. As you can see in the blue bars, that the light blue bar, the 25 to 39-year-olds, there's also pressure on that same housing stock of 50 to 64-year-olds. So if you see that red line back in 07, what it's done all the way down to the right there, there's nowhere near enough inventory to support the demand that's out there. So we focus on finding those projects that will work in our system, and then we provide investment opportunities for investors who will invest alongside of us. Next slide. So what we do is we repurpose, we call it obsolete property. So the one on the left is an old tech building that was built in the 70s here in the Silicon Valley where we are. It was built for the tech boom. And if I use simple math, let's say that building's worth $10 million as an industrial building. As we take it through the entitlement process and get all the approvals and get that land plan you see on the right fully approved by the city for housing, we can sell that to a publicly traded home builder like Toll Brothers or Pulte or KB Homes for 15 or 20 million. So that $10 million obsolete value, lower value property can be repurposed for a higher, better use. Next slide, please. So what we do is kind of in 4, kind of our 4 tenets, we call them. They are control the property versus own it. So we control it with a purchase and sale agreement. So it's just like when you bought your house, you got to sign a purchase and sale agreement. We control that property, but we do it over time. So we lock it up with this contract for about 4 years, or excuse me, about 2 to 3 years, 24 months typically, and then with extensions. So we control it while we're taking it through the entitlement process. So that's one tenet. The next thing is we have you invest across multiple properties. So you've got diversification. You're not in just one asset, as I mentioned earlier. We invest across multiple geographic regions. We believe, and that picture's a little outdated now. We're in the Raleigh-Durham area. We just hired our Seattle person. And we've also got the Eastern Seaboard as well. So we invest over time is the last thing. So as we go through and explain this in more detail, as you learn and want to learn more about us, you'll see why this is beneficial, because it really is about protecting your capital first and then generating what we call outsized returns, better than quote unquote the stock market returns. Next slide. So as you can see this, we kind of think about this as a little bit of a conveyor belt. So you'll invest when somebody puts money in today, they'll invest in projects that started 6 months ago, 6 to 24 months ago, 24 to 36 months ago. As those projects have aged and get close to the end of their cycle, meaning getting through the approval process and now ready to exit. Exit to us means we're selling it fully approved to a home builder. So that's the key to our model is we've got, all the publicly traded home builders, top 10 to 20 buy from us. You can see the names up there. We also started our own home building division called Homes Built for America. So we'll talk about that in more detail. But ultimately, when somebody invests, they're going to have a mix of early stage properties, mid stage, and late stage, which means your returns start to flow out to you faster. Typical real estate funds are 5 to 7, sometimes 10 years in nature and duration. What we see is people typically will invest with us and they'll see their money start to cycle back out in 6 to 9 months. So every time we make a sale to a home builder, we make a distribution. So you don't have to just hold on to your report, if you will, your quarterly reports from us and wait to see what happens in 5 or 7 or 10 years. You'll see that money start to flow back to you again within the first year. And then typically a full cycle, meaning all of your money has gone back out to you in about a 3-year cycle from today. Next slide. So like anything else, any company is really about the team. So what you'll see is that 25 to 30-year veterans. The co-founder there on the left, Scott Clark, my CEO, we co-founded the company 23 years ago, actually, technically. And you'll see a lot of residential real estate development experience here, a lot of publicly traded home builder division presidents, CFOs of big organizations. So great depth in our bench. That's at the executive level. Next slide, please. And then at the property team level, again, people that were former division presidents or leaders in the publicly traded home builders. Also in the cities, Leah Benison on the left side kind of oversees all of our due diligence and all of our entitlement projects with our team, with the support she has to handle that. So a deep bench, and I think at the end of the day, whatever your business is, it's all about the people, and we have incredible people that have aligned with us over time to do some incredible things within our organization. Today, our portfolio has about 5,500 units in it, 43 different projects underway. The investment opportunity when somebody invests would come in with an allocation across 10 to 20 properties, and that would give you a nice diversified portfolio to start with. Next slide. So we did co-found it 23 years ago, but this strategy, kind of being principles in our own projects, came to life after the 2007-2008 crisis. So we founded it in 2008. You can see we've had a lot of transactions, a lot of home sites that we've delivered to the market and are delivering to the marketplace. So we have a great track record and very proud of that. I think what really strikes me as very interesting is all of our investors that have invested with us have always, knock on wood, invested additional capital with us, right? We've had very good success and very good track record with our existing investor base, and we've had multiple transactions with the same dealers. So Pulte's bought multiple projects from us, Toll Brothers. So once we start to do business with investors or with builders or with cities, in Milpitas alone, I think we've had 6 properties that we've gone through the process with. And I think we sold 4 of those to Toll Brothers to kind of button that up. Next slide, please. And really, this comes back to the founding of the company. Myself, Scott Clark, our CEO, and one other partner went up to the mountains up in Arnold, California, came up with these core values 23 years ago. They have absolutely served this company well to help us, make sure we're bringing the right people into the company, and not just from an investment standpoint or from an employee standpoint, but from who are we doing business with? Which cities are we partnering with? Which companies out there are we partnering with? So these really do serve us and have served us. And anybody that wants to learn more about us and our core values, I was one of the founders that came up with them, so I can tell you that story over a cup of coffee here in the office. And I think with that, I'll lead it back to Morgan if there's anything else that we wanted to cover, or did we get it covered?
No, I think you handled everything there, Joe. Thank you. And we kind of want to just round it out with, if you have any questions, you want to learn anything further, you can reach out to me at mtassler@thetruelifecompanies.com. I also have a Calendly link that Localvest has. And if you're on our deal page, you can get right in there and dig into the details with us.
Great. Thank you very much, everybody. Appreciate the Localvest efforts and team to put us together here. And thanks for all the veterans that are participating here. Thank you for your service.
All right. Thanks, Joe and Morgan. And I got to say, this is pretty unique when you look at the way this works, because you think about investing in the national home builders, and then you think about buying into real estate. This is a unique niche in here to get in and a way to participate in real estate. So if you have any questions how it goes, it is a unique, reach out to Joe and Morgan, ask them questions to go through. Joe's contact information, Morgan's, are in the chat, and you can go to the deal tile as well. We'll send that out. Now, next up, we also have Lou Baker, who is an early stage investor himself in several veteran-led ventures, Army veteran, president of Rock Creek Wealth Planners and Advisor, but he's also part of the Academy Fund, and he's going to go. If you are ready, Lou, I'll turn it over to you.
Great. Can everybody see and hear me, first of all?
Yes.
All right, fantastic. So what I wanted to do today is discuss the Academy Fund. And let's get the housekeeping out of the way first. You can read for yourself, but the most important things to take away from this disclaimer is that this is a Regulation D 506C offering, and is available only to accredited investors. All investors should consider the investment objectives, risks, charges, and expenses of the fund before investing. and this information is only provided for your convenience. If you'd like more information, there will be contact information flashed on the screen a little bit later. Again, all investments contain risk and may lose value, and this is not a solicitation. So, with the housekeeping out of the way, I'd like to introduce you to the Academy Fund. So, what we do, in a nutshell, we provide short-term financing to veteran real estate entrepreneurs. We are basically serving as the bank. Why I say that is because the Academy Fund takes first lien positions to provide this funding for commercial real estate transactions only. In other words, there are no primary or secondary residences that we lend money to, for projects that we lend money to. We are not investors in real estate, but we are lenders. So again, we are the bank and we only do first lien positions. So how do you benefit as an investor? So the loans are being provided from you as an investor to be distributed to the veteran entrepreneurs that go through our due diligence process. The investment pays interest on a monthly basis as opposed to quarterly, or sometimes in private deals almost at the end. So we do ring your doorbell every month with your distribution check, and we'll talk about exactly what those distributions are a little bit later. As with all investments that you'll see coming through Localvest, certainly important that you take a look at and meet the team. This team, unfortunately, is is heavily weighted towards 3 Naval Academy graduates and 1 West Pointer. But the founder is Bill Militello, who has a private equity shop in Militello Capital. I've known Bill since 2004 as we were partners in an RIA firm together, but he's been doing a phenomenal job in the private investment space, investing in over $850 million worth of commercial real estate deals. Brian Witten, also Naval Academy grad, has been in the real estate and lending business for over 15 years. His fund, Hornet Capital, is now at over $180 million in real estate-backed investments. Scott Mackes is the reason why you're all here. He's the brainchild of the marketing efforts behind the Academy Fund. He also happens to be the first level of screening for borrowers that come to the Academy Fund for funding. I myself, I guess this background is a little bit old because I'm in my 30th year in the investment advisory business, working with private clients. My experience spans from Merrill Lynch and Morgan Stanley to my own wealth management shop in Rock Creek Wealth. And I serve as the investor relations person on the team, helping investors and advisors who help investors understand how to place the Academy Fund should they choose to invest. So how do we find our borrowers? What I will say is that what Scott Mackes has done is really, really incredible. And what we're trying to do on behalf of Scott is provide an outlet. What Scott has done is created an ecosystem for veterans and those who like to support veterans to be able to source capital. We are just one of the ways as individuals that borrowers get brought to the table. But Scott has his hand in all of these different avenues here. In Localvest, through Jake, through the Service Academy Business Mastermind group that he's founded, as well as 10X Vets. If any of you are entrepreneurs, as a member of 10X Vets myself, we get together on a regular basis, weekly calls, as well as an annual conference that gives us as entrepreneurs the opportunity to work amongst other entrepreneurs that are trying to, in essence, 10X their business. We also receive referrals from other military veterans and other people who know that we lend to veterans. So that's where we find our borrowers pretty much. So the due diligence process starts with these 5 C's. again, Scott Mackes is probably going to be the first person that you all see if you are a borrower looking to receive funding from the Academy Fund. But we're all looking at these things. And number one starts with character. We like to think that we are just one or two contacts away from somebody in our military circle that knows you. So we are lending to veteran real estate entrepreneurs, and we are able to reach out and touch people where they are, right? Having been in business with Bill Militello for over the past 20 years, Bill and I both have felt in our experience that dealing with veterans has been really a great experience. The integrity, the technical competency that veterans have, as well as the grit that they have to see a project through, is what we're really looking for first and foremost in our due diligence efforts, right? We also want to know that the borrower has the capacity to handle the project, whether they are going to be overloaded with different projects that they're in, or if they have the capital and resources available to see a project through. Collateral. Again, we only invest in first lien positions, all right? So we are essentially the bank, right? We do due diligence on the founders, or excuse me, on the entrepreneur, but we also do our due diligence on the collateral, making sure that the collateral that is assigned can cover the amount of the loan, right? Conditions. Okay. We are not in the loan to own business, all right? We want to make sure that our veteran borrowers have a way to exit their project, right? There are many quote unquote lenders out there, or hard money lenders out there, that see an opportunity in providing capital to a borrower. And if the borrower doesn't fulfill their obligation, they're happy to take that project away. We are not in the loan to own business again. We are really doing our homework to make sure that the borrower can achieve success. Does that mean sometimes we have to turn borrowers away? It does. And we have, for the borrower's own good, as well as for the good of our investors. Capital. All of our borrowers have skin in the game, right? They all have skin in the game. We're always asking the borrower to bring cash to the table, as well as making sure that the property has a good enough loan to value ratio for us to be able to secure our interest in the project. But all of our borrowers do put their own skin in the game. So here's the good part. Since we've been running the Academy Fund, again, we are paying investors monthly distributions, and we are now approaching almost $3 million in monthly distributions that we've given out. And our run rate right now is a little over $130,000 in distributions a month, right? So we're knocking on your door every month with a check or a direct deposit ACH to your bank account. So we feel like this is a unique opportunity, whereas most alternative investments or other alternative investments have a either semi-annually, annual, or sometimes a distribution at the very end of the project. Again, we're sending out distributions monthly. So where are we doing loans, and how many loans have we done thus far? Currently, we've lent out over $50 million to veteran entrepreneurs through 80 different loans and through a ton of different states. That list is growing, but there are still a lot of states that we haven't done any business with. And we'd like to, if there are people on the call that are listening, we'd certainly like to come to your state and find a way to find different lending opportunities for the fund. But again, we've done over $50 million in loans thus far, and that's between 80 loans. So we're continuing to do loans over and over and over and we welcome applications from new borrowers. All right, so this is typically my slide where I come into play. And is this investment right for you? What I'll say as an investment advisor dealing with individuals and families, the perfect investment has three different characteristics. Number one, it has high return. Number two, it has guarantees. And number three, liquidity. Liquidity being you can turn your money into cash right away. The problem is no investment is perfect. You can never get all three of those things in one investment. If you've got something that's high return and highly liquid, it's certainly not guaranteed. Think Bitcoin. If you've got something that is guaranteed, okay, that's guaranteed, but also very liquid, you're not going to have the high return. Think treasury bills. In the Academy Fund, we're going to give you a little bit of all of those things. Number one, let's talk about high return. The return profile that we look at is the stock market in general as measured by the S&P 500. From a financial planning perspective, stocks historically return about 10%. Okay. If you're working with a financial planner and you're doing financial projections for yourself, the rule of thumb that financial planners use is 10%. We consider that high return. All right. We also understand that bonds and fixed income investments are returning somewhere around 5%, historically between 4 and 5%. And typically you get 2 to 3% on cash. So if you think about the Academy Fund, we're paying investors anywhere between 8.5%, anything under $100,000, between 100 and 250, 9.25%, and at 250,000, we're paying 10%. So if you think about, is this a high return opportunity? I would say if we're getting at least 85% of the stock market's overall rate of return, but we are collateralizing it with real estate, I'd say that's pretty high, 85% of the overall return of stocks. Is the fund guaranteed? No, this is not an FDIC insured opportunity, but we do take some measures to give our investors some security. Again, we only invest in first liens. So first liens meaning we are the bank. The first person to have any claim on a property that we've invested or that we've lent to a borrower is the Academy Fund itself. So again, it's not FDIC insured, but that first lien position does give our investors, as well as us as managers, some comfort in the security. All right. Lastly, is the fund liquid? Well, there is no commission structure or any back end fees or charges to have your money pulled out of the fund. But we don't want you looking at this 8.5 to 10% rate of return vehicle as your high yield money market fund. In fact, we like, although it's not in the PPM and our private placement memorandum, although there is not something that says you need to keep the money in 1 year, we like for people to think about this like a 1-year CD investment and make your intentions clear that you are willing to part with these funds for some period of time. Again, there is no back-end charge. And by the prospectus, by our offering documents, we are returning capital when necessary, one quarter of your investment every 90 days or every quarter. So over the course of a 12-month period, if you make a redemption request, we're saying that we're going to get you that money out. That is by prospectus. In practice, however, we're in no rush to keep your money from you. If you think about this, if we're holding money in cash in the fund, we're paying out investors 8.5 to 10%. If there are assets available in your fund and you want them, we are trying to get you that capital back as quickly as possible because it's costing us to carry your money uninvested. There could be times when you do reach out to the fund for a distribution, and the fund's money is committed. And therefore, we won't be able to get it out to you ahead of schedule. But in practice, with the few distributions that we've had to meet in the fund, if the money's in the fund, we're going to get it right out to you. All right. Go ahead, Scott. So again, I've mentioned the rates of return that we're providing on a monthly basis. Anything under 100, we're paying 8.5%. Anything over 100, between 100 and 250, we're paying 9.25%. And anything over 250, we're paying 10%. All right. So what's potential drawback? Well, one potential drawback is, unfortunately, this interest that you're receiving, or this distribution that you're receiving, is taxable as ordinary income. All right. So what does that mean for our investors? That means we got to be smart about it from a financial planning perspective on how we use this asset. Is it okay to receive taxable distributions of 10%? Absolutely. Pay your taxes. Is it ideal? Not really for a lot of our investors. How can we change that? Well, the good thing about this instrument being a debt instrument is that this investment qualifies for qualified money, such as self-directed IRAs and self-directed 401ks. You can also invest this in a self-directed Roth IRA, where you could be getting tax-free distributions from this investment. So we work with clients and we work with advisors who help clients to structure their portfolios in ways that they can maximize the Academy Fund investment from a tax perspective. So if you want to get in touch, theacademyfund.com, as well as there is an online application for borrowers as well.
Awesome. Thanks, Lou. And let me just pop in for a minute. Guys, my name's Scott Mackus. I'm one of the partners at the Academy Fund. And what I'd like to do, if I've got a minute, is just, first of all, give a shout out to Localvest. Really just an amazing platform. So if you're on the call and would like to create an investor group, whether it's geographically based or affinity based, I definitely would encourage you guys to create an investor group. But as it relates to the Academy Fund, I'd like to just bring your awareness to our two investor groups and really just kind of share the purpose of each one. So for the Academy Fund investor group, this one's for investors. And what we do here is, certainly you can learn about the Academy Fund. We have a deal tile. But the way that we're using the group is we're posting individual loan participation opportunities. And so what is a loan participation opportunity? A loan participation opportunity is the opportunity to participate alongside the Academy Fund. So a deal or a loan that we've already underwritten, that we've done the diligence for, and it's a single opportunity, but you get a higher interest rate, right? So, and basically what we're doing is passing along the interest rate that we're charging the borrower. So for folks that are looking to participate in one of our loans, this is an example of an existing loan. It's a storage facility and a car wash. So real estate that's got a storage facility and a car wash on it. You can look at the deal tile. You can see when it was originated, when it matures, and the loan participation opportunities, it's not a security. So it's open to both non-accredited and accredited investors. And this one's at a $25,000 minimum. So I wanted to just bring your awareness to these types of opportunities as well. If they fit into your portfolio, we post them in the investor group as they become available. And it's really kind of a win for both parties. So we're offering investors a higher interest rate, and then that frees up our capital to then go and write new loans. So that's the Academy Fund investor group. Would love for you guys to join that. Jake I think we'll share a link to that. The other one is a brand new one. Now, this is the wholesale property group. So for the real estate investors that are out there, we haven't really officially launched this yet, but this is coming. So if you're looking for off-market real estate deals, this is going to be a platform for military veteran wholesalers, folks that find off-market opportunities to post them in the group, and for real estate investors to find out about them, right? And all we ask is, hey, if you find a deal and you need financing for it, we'd love to be your financing partner. So again, we'll share links to join for these two groups. We'd love for you guys to be a part of them. They're free to be a part of them. And I'd encourage you guys to create your own investor groups on Localvest. Again, it's a great platform. And Jake and team, thanks for having us present today.
Absolutely. Thanks, Scott. I want to say, we're here at Localvest. We're excited about this idea, these loan participation agreements, wholesaling opportunities. We're looking for more of the ways that we can offer things to the non-accredited and accredited investors. So it's worth looking at. It's a little bit different type of offering for both of those. And I mean, overall, our goal here at Localvest, we're trying to provide more ways to help veteran-led companies of all different kinds to be supported by veterans and their strongest supporters, which is this community. So I'm very excited about those and those chances. So we'll send those out. Those links are in the comments, but we'll also have those. As we wrap up our pitches today, it's very clear we have some very exciting opportunities in the world of real estate, right? We've got ways to participate in development, both in the development and repurposing of land, and in being able to make loans to veterans who are off developing properties. So a big thank you to Joe and Morgan and Lou and Scott for joining us today, and everyone else that's here in attendance. We look forward to you join us for our next events. In fact, our next event is on May 1st, where we'll have another pitch event. And we're trying to theme some of them as well, since today's was a real estate one. Just the opportunity to bring us together and see these opportunities. You can always go and see the deals on the deal pages on Localvest as well. Another thing that we're adding in here is we are going to start tailoring some information for investors and talking about some discussions and hosting those at Localvest about upping investing knowledge. And so we're bringing in some experts. If possible, we'll have them be veterans. I have a few of those lined up to talk about how to make the most of your portfolio. So if you're an investor, we'll be talking about how as your wealth grows, how we can improve your need for new information on legal and tax and planning. So watch your inbox and social media. We'll be sharing those very soon here in the month of April, putting the finishing details on. And like I said, our next event, May 1st. So we're going to send a follow-up email with the recording, all the contact information you have from today, any questions that weren't answered as well. I want to thank all of you for attending, and from all of us here at Localvest, have a great rest of your week.